Hi, thanks for watching. I appreciate you being here. Welcome. A few weeks ago, I started making some budget videos because I love watching those on YouTube. I love watching other people's budgets. I love watching how they spend their money. I love it all. So I thought that it would be a fun way for me to share and document my journey. But recently, I started thinking about expanding my budget series. And one of the things that I've decided to start doing was reveal my zero-based budget with you. In this video, I am going to go over what a zero-based budget is. I'm going to provide some background information on my family's own zero-based budget. And then I am going to do a detailed breakdown of the previous month's budget. But before we get into it, here's a little bit about me. Hi, welcome to my channel. Thank you for watching. Here's a little bit about me. My household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. We live in a high cost of living city in the Northeast. My husband and I both went to graduate school, but fortunately, we no longer have student loan debt. I work in banking and he works in aviation. I take care of the family's finances and I love my role as the self-appointed CFO. I love to talk about all things money, whether it's investing, saving, or making money. I look forward to sharing a wealth building journey with you. I look forward to getting to know you, and I hope you enjoyed this video. Okay, so what is a zero-based budget? A zero-based budget is a method where all of the expenses must be justified for every new period. Companies use that a lot, but individuals can use it as well. When companies use it, they typically make a budget for the entire year. Most individuals make their budget 1 month at a time. Even though some people do try and estimate a year-long budget, I happen to be one of those people, but the most accurate budget you are going to have is going to be month to month because you never really know what might crop up besides your regular expenses. Usually a zero-based budget starts at zero and it ends at zero. The idea is that every dollar has a job. When you start your budget on January 1st, you don't have money left over from December 31st because the idea is you put all of that December income to work. There is no such thing as idle cash in a zero-based budget. The money goes either towards bills, paying down debt, investments, or maybe even medium-term goals, the ones that are not long enough for you to risk putting the money in the market, but not short enough that you want to keep the money in cash. So what you would call a sinking fund. Whatever budgeting style you adopt, there are always some pros and cons. A benefit of a zero-based budget is that it requires you to justify a use for every dollar. That means you are less likely to have money sitting around that has no real purpose, and you are less likely to waste money. Of course, the downside is that it takes a little bit of time because it requires more work. If you have to force yourself to justify a use for every single dollar that comes in, there's a little bit more thinking that goes into it. But I don't think that the downside justifies not doing it. Here is the anatomy of our own zero-based budget. My family's zero-based budget is broken down into 3 main categories. The first one is bills. These are our obligations. We don't have a choice. We have to pay them. This is how we put food on the table. This is how we keep a roof over our heads. We also have sinking funds to meet medium-term needs. And then we also have investments, whether it is for college for our son, where we save in his 529, or money that we put into our brokerage account for long-term use. You will notice one thing in our zero-based budget is that we have a lot of credit card usage. The reason for that is because we put everything that we can possibly put on our credit cards, we do it. You're probably wondering, how does she eat? We don't see any grocery allowance. Well, that's because I pay for my food with a credit card, so I don't really spend cash on food. What ends up happening is I get a bill at the end of the month and I pay my credit card bill. The same thing for gas and household and personal care items, or any purchase really that allows the use of a credit card. For example, I had an issue with my sink a few months ago and I needed a plumber to come in. He came in, but he did accept credit card payments. Therefore, I paid with a credit card. That's not something that's going to come up as an individual breakdown in my zero-based budget. What we will see is the aggregate when I pay the credit card bill. I do have a separate budgeting mechanism that allows me to track my expense categories so I don't go over, but overall you will not see it in this particular budget. The reason why we do that is because we want the points. We want the protection that using a credit card offers. You are much more protected and much more insulated when you use a credit card versus when you use your debit card or even when you use cash. And it also also allows for better tracking. I am registered for one of these popular websites that allows you to track every transaction that you create, and by swiping my card, it gets uploaded to that website and I categorize it. Also makes the tracking much easier. Another thing that you will not see in my zero-based budget is things that are related to medical. The reason for that is it goes out, but it also comes right back in within a matter of days, since we use an FSA to file claims and get reimbursed for anything that we spend. The FSA money is still our money, but because it comes out of our paychecks before we ever get to see it, it's not cash that we ever have to really move around. A good example of that would be if I pick up my prescription at CVS. I have a $10 co-payment on my prescription. I swipe my credit card for $10. I immediately get a receipt, and within a couple of days, I use that receipt to file a claim and get some FSA reimbursement. That FSA reimbursement goes into my account. I use that $10 towards my credit card bill. So although the money is moving, it's moving in and out in the same amount, and it zeroes itself out. So for the sake of simplicity, anything that nets to zero, I completely exclude from this budget. All right, let's get to the previous month's $0 budget. If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good, and of course, subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. As you can see on the screen here, I have a blank Excel sheet for my zero-based budget for the month of March. There's the money that comes in, and then the money that goes out to meet our obligations. There are savings and investments, as I previously stated, which makes up our zero-based budget. These are the main categories. I'm not going to individually break down every single category. I'm not gonna say I got X amount in rental income for this property and X amount for that property. Rather, I'm gonna give the total for the month. Let's start with rental income. That added up to $4,704. The category that says income is mine. For the month of March, my total was $3,400. These amounts already account for taxes, they account for health insurance deductions, as well as employer-sponsored retirement contributions. This is simply the cash that comes into our account that we are free to do as we wish. His income was $6,792 for that month. The fourth source of income we got is a category that you see here that is called solar. I made a video on this. We do have solar panels on our house. We are able to take advantage of the solar renewable energy credit, and we resell our excess production back onto the grid. That is not a check that comes every month. It comes every quarter, and the amounts are not consistent. In the fall and in the winter, there is less sun. The checks that we get that are more consistent with the amount of sun that we receive in the summer tend to be a little bit more substantial. The solar check that we received for the first quarter of 2022 totaled $826. And then finally, we received $10 in interest income for a total income of $15,732. Next, we are going to break down the expenses category labeled money out. If you watch my other budget video, you'll know that housing is our biggest single expense. The payment amount that I am going to post here includes what is obviously owed to the bank, which is the mortgage, but it also includes taxes and insurance because those items are escrowed. We put money in the escrow account every month, and then every quarter the bank makes the tax payment, and every year they make the insurance payment. And the amount for the month of March was $2,700. For our rentals, we do consider that an obligation because we have to make the payment whether or not we get rental income, but that is not considered housing costs because we don't live there. It's just another line item in our budget, another obligation that we have to meet. The total includes mortgage, taxes, and insurance, and that is reflective of all of the properties. The expense that we had this month was $1,890. You'll see that this amount is a little bit low. I accidentally made a $740 payment to one of the loan accounts that I did not intend to make. For one of the rentals, we have a mortgage with Chase. We also happen to have a Chase Sapphire Reserve credit card. The bill for the credit card for the month of March was $740. When I went to go make the payment, I accidentally selected the wrong Chase account. I ended up making that payment towards the mortgage rather than the credit card. It was very frustrating, but by the time I noticed it, the money had already been withdrawn from our checking account, and it was too late wait for me to make any changes. But there was one other thing about that account. It turns out that I was already a month ahead in payments anyway. So when I made that $740 payment, it went straight to the principal. But since I was a month ahead, I didn't owe anything for March unless I wanted to pay it. And even though it was technically my fault, I was frustrated and decided that they had enough of my money and I was not going to send them another dime for the month of March. That's what resulted in this lower than normal mortgage payment for the rentals. In terms of rental expenses, the amount was $750. That expense includes maintenance, water, trash removal, landscaping, snow removal, common area electric, anything that you can think of that a tenant is not responsible for falls under that category, and for the month of March, it added up to $750. Next on the list is daycare, and daycare is another fixed cost. We pay the same amount every month, $1,360. Of course, there is the car note. We do have 2 cars, but one of them was more recently purchased than the other and has a car note on it. I have a separate video that talks a little bit about the buying process as well as the circumstances surrounding us adding this loan to our debt total. If you'd like to check out that video, I'm also going to link it in the description box below. The amount that we pay on the car note every month is $940. I know this is atrocious for a car payment, but if you would like to watch more videos of me self-destructing and completely setting my finances on fire by blowing up my budget with massive consumer debt, be sure to hit the like button and subscribe. Next, we are moving on to the credit card payments. If you recall the beginning of the video, I did say that the reason why you don't see a lot of other categories in my zero-based budget is because I do not pay for these things in cash. I pay for them using the card, so the cash is then used to pay off the card. The PIF that you see stands for paid in full. We don't carry balances, we don't make minimum payments. Whatever amount shows up on the statement, we pay it by the due date in full. The amount that we paid for the American Express card was $2,600. On the Chase Sapphire Reserve card was $1,040. And then on the Bank of America MasterCard was $252. The next one is our electric bill. It was $190. It's been cold, guys. Plus, when it's dark, you have all the lights on, so it's really expensive in the winter time. Not to mention, we don't get as much sun in the winter. We really only get a couple of hours of daylight because I live in the Northeast. I'm really looking forward to the spring and summer where we have much longer days, warmer weather, and a lot of sun, so we can generate a lot of kilowatt hours and bring down our electric bill to zero. Finally, we had excise taxes. Excise taxes added up to $176. Taxes that we pay on the vehicles that we have. They are required by law. We do not have a choice but to pay them. Fortunately, this is an amount that only comes around once a year. As you will see, my total expenses are $11,898. That is the amount that we spent in total for March of 2022. That leaves us with $3,834, and I'm going to tell you exactly what we did with that. The first is my spouse's Roth IRA. We put $1,000 into his Roth IRA in March, and then for my Roth IRA, I put $0. I don't have any money going into my Roth IRA in March because I had the bright idea of maxing out my Roth IRA for 2022 on day one. I didn't just fund the account, I also went out and invested it immediately. I imagine I don't need to tell you what the market has done so far this year. It looks like I would have been much better off gradually depositing the money throughout the year, but we'll see what the outcome is. I front load my investment thinking it's going to be a better outcome. Of course, I completely ignored the part that it works 2 out of 3 times, and there was a very good possibility 1 out of 3 that I would not have a favorable outcome. And this is what happened to me. I fully funded my Roth IRA the first business day in January, and now it's down. In the end, it doesn't really matter because that's not money that I'm going to be touching for a very, very long time. It does have plenty of time to recover, but it is still very frustrating to have to log into my account and see red. If you are feeling in the dumps about the markets though, I made another video on the topic that talked about how I pulled myself out of the funk from seeing all that red year to date. I was feeling a little depressed myself, in part because of this strategy that I employed for funding my Roth IRA, and I ended up doing this neat little trick that made me feel all better about it. That video is going to be linked in the description box below as well. For the 529 plan for my son, we put in $500, and in our brokerage account we put in $1,500. If you look over here, you will see this gray section function here that I use as a check to make sure that I am really hitting zero. My goal is to be at zero. I don't want to be under by $1. I don't want to be over by $1. I don't want to be in the red, but I also don't want money laying around with no purpose. I don't know if you've been paying attention to that throughout the video, but that number changes every time I update the cells. The next category is the Bank of America savings, which is the sinking fund. I put in $834 in there. That brings us to zero. But you're probably going to notice that I have two more sections that have not been filled out. Both of these sections, I'm gonna go right ahead and mark them at zero because we don't have any more money to spend, and I did not put any additional amounts in them. They are currently fully funded. I don't need to add any more money to them. I have enough to carry me through any reasonably foreseeable emergency in both of these accounts. More specifically, the American Express High Yield Savings account is the account that I'm using as a bridge account to last me until October. Why October? The other part of my emergency fund is in I-bonds, and I-bonds are locked in for the first 12 months. You can't touch them at all. I was really sick and tired of my money getting eaten up by inflation. I ended up moving a lot of my emergency fund into I-bonds because I-bond interest rates are in part based on the CPI data. You have a much better chance of keeping up with inflation if you have your money in I-bonds. Since it's completely locked up for the first year, I couldn't run the risk of having zero cash on hand in an event of an emergency. So I use the American Express High Yield Savings account as the account where I hold enough money to carry me through October, and at that point I will be completely free to take out my I-bonds if I have an emergency. If I don't have an emergency, I have no intention of touching it, but October is when I will be able to if I need to. And that is the plan for the foreseeable future. As long as interest rates remain low and inflation remains high, it makes no sense for me to leave my money in a savings account. I did make a video on the topic. I discussed how I'm protecting my emergency fund from inflation. If you want to check that out, that will also be linked in the description box. And as far as the I-bonds themselves, the reason why we can't put any money into them is because we maxed out our ability to put money in at some point in January. Every calendar year, everybody can put in $10,000 per social security number. In January, we each put in $10,000 under our own social security number, so we are completely maxed out. We have no more ability to put any money into I-bonds until January 1st of 2023. So that number is zero, and it is going to remain zero until next year. And there you have it. My zero-based budget breakdown ends up with a net of $0 because every dollar has a job. If it comes in, it goes towards bills, it goes towards savings, or it goes towards investment. If you have any questions, let me know and I'll be glad to answer them. I'll see you next time.